Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, January 18th, 2021, and I'm pre-recording this Trading Places Live for Tuesday, January 19th. Futures are higher Monday evening as Wall Street looks to open this holiday shortened week a bit higher. Little different format today. Obviously, market was closed in observance of Martin Luther King Day on Monday. I don't have a daily market recap to go over, but on today's agenda, I will go into talking technically. Then I'd like to get into relative strength, earnings spotlight, and wrap up the show with 3 you must see. We do have a big event coming up over at Earnings Beats. Every 3 months, we select ETFs for our model ETF portfolio. We did that back in October, on October 19th. And so it's been 3 months. So January 19th, Tuesday, January 19th, after the market closes, I'll be selecting our next model ETF portfolio. The first quarter went extremely well. Our model ETF portfolio is up more than 5 percentage points above the S&P 500 with just 1 day to go. We'll see how Tuesday wraps up, and then that one will be in the books. And Tuesday after the close, we will replace that model ETF portfolio with new ETFs for the next 90 days. If you go over to earningsbeats.com, you can sign up for our free Earnings Beats Digest newsletter. You simply need to type in your name, email address, hit that subscribe button. We do publish a newsletter Mondays, Wednesdays, and Fridays, usually before the market opens. No credit card required, completely free, and you can unsubscribe at any time. I mentioned the model ETF portfolio. It's got different inception dates, so kind of confusing to put it up here with the stock portfolios that we have at Earnings Beats, but the model ETF's done extremely well. And you can see the numbers here for our 4 stock portfolios, which also have done extremely well. Our latest quarter, now these are not calendar quarters. This is from the time that we announced our latest stock selections for each of our portfolios, which was back on November 19th. But in just 2 months, the model portfolio, as you can see, is up 22%, almost 23%. That compares to the S&P 500 at 5%, 5.2%. So here are all of the portfolios for this quarter, and you can see all of them easily outdistancing the S&P 500. But Tuesday night, we will be looking at the ETFs and selecting our portfolio of ETFs. If you'd like to be a part of that, you can join our service. It's a $7 fee, but we'll refund you the $7. It's a 30-day period. So essentially, you're getting a no-cost 30-day trial. And love to have you come in, check that out, and see what you think of our service. All right, let's go ahead and move on. I'm going to get into the 10-year Treasury yield here. This is as of Friday's close. Again, bond market closed on Monday, as well as the stock market. Big move up, but that black candle printed on, that would have been last Tuesday. And we wrapped up the week kind of consolidating, moving a little bit lower. We got up to 1.18, 1.19%, fell back to just under 1.10% by Friday's close. I'd watch maybe that 20-day, maybe even all the way down to 1%. Just psychologically, I think that 1% level is going to be pretty important. So I wouldn't be surprised to see us go back and test that area in the near term. All right, let's move on. And I want to get into talking technically. And for talking technically today, I wanted to pull up a few sectors. I'm going to start off with communication services. Communication services, as you can see, over the last 6 weeks or so, been mostly sideways and actually finished a little weak last week. And it looks like, breaking below the 50-day, maybe the initial thought is that things don't look so good. You can see the cross below the PPO center line. I probably would give it a little bit of room here. I actually like the XLC. I think when you're looking at where we had broken out from, the high in September. Remember, we had that high and then consolidation. And you can see we struggled to get back through about 64.75 or so. And then when we finally did it, each time we've pulled back, we've been able to hold that level. So I think that's a key area of support. We're almost on it. Maybe another even $65, $64.75 to $65, right in that range. So I think from this level, maybe 1% to the downside is what I'd look for. I don't think we'll go much lower than that. I'd be surprised. But I actually think we'll probably see a move back to the upside in communication services. So this is a group that I feel pretty good about. Next up, let's take a look at the energy group. Energy has been absolutely on fire. You take a look at it and you can see, we made the move up in November, got the vaccine news. Energy's been leading ever since. We did put in this second high here with a slightly lower PPO, negative divergence. Went sideways to down for the next couple of weeks, went a little bit below the 20-day moving average. Saw that PPO get close to the center line, and then we took off again to the upside, which I think is bullish. I do believe in the short term, though, we may pull back, watch that rising 20-day moving average. Not only do we have the down day on Friday, but there were a lot of in-the-money calls that likely got exercised last week, meaning that market makers are likely on the short side, taking the opposite side of those trades. So I think to the downside, we maybe want to watch that 20-day moving average. If you go all the way back to the high in June, you can see that was at $45. That's exactly where we went up to on Thursday before we reversed back to the downside. So I think we just got some overhead resistance around 45 that we're going to have to negotiate. So in the meantime, I wouldn't be surprised to see a little pullback here on the XLE. Next up, I'm going to pull up the XLI. The industrials, kind of like communication services, little sideways action here for the past several weeks. I think eventually we're going to break out of this to the upside. But in the near term, maybe keep an eye on that early January low near $86. I would be surprised if we went back below that. In fact, I don't even know if we'll go back down there. I'm kind of hoping that this move back up above the 20-day and then that hammer right on the 20-day on Friday marks the bottom. And I'd like to see the XLI start to break back out again to the upside. So far industrials have struggled here these past few weeks, as I mentioned, but I actually believe that industrial is going to be one of the better groups in 2021. But if that's going to happen, we really should start to see some outperformance here in the near term. All right, next up, I want to talk a little bit about Max Pain. I always talk about options, especially with our members at Earnings Beats. We have an event that's dedicated just to Max Pain. It's the Tuesday before the third Friday of every month. And so last Tuesday, we had our get together and had the event, and I just indicated that we had some issues potentially with a move to the downside because there were so many in the money calls out there. And that's what we got. We ended up seeing a big pullback, especially on Friday. But the thing that was interesting about Friday, and I wrote a number of articles over the weekend, you may have seen them at StockCharts. But the thing that was, I don't know, shocking might not be the right word, especially if you're familiar with what happens around options expiration. But hopefully, if you trade, you're aware of what's going on as we get close to that third Friday of every month. Now, on Friday, it behooved market makers to move certain groups lower and then perhaps to move certain groups higher. Anytime you go into option expiration week, the lowest scooter scores are those that on a relative basis have not been performing as well. So it was kind of interesting that on Friday, the three of the lowest scooter ranked ETFs, sector ETFs, all performed best on Friday. And then the three highest scooter scores were at the bottom, including energy, which has really been on fire of late, rising almost 4%. Financials, I mean, these two groups, energy and financials, since the vaccine news, the positive vaccine news came out in November, these are the two groups that have been leading the market to the upside. And you can see financials, the scooter score is almost 80. So clearly that's been the highest ranked sector in terms of relative strength using the scooter. Energy's right there, not far behind, along with materials. But all three of those groups got hit the hardest on Friday. And you can see basically the top half were the lowest scooter scores and the bottom half were the highest scooter scores. And it wasn't just the sectors. I mean, if we go into the industry groups and take a look at it here on the table view, let me show you the consumer discretionary. So here were your top performers. Scooters, 34, 24, 37. The worst performers, scooters, 59, 83, 73. And there's automobiles at 99. Just about anything that had a good scooter score finished down on Friday. Worse yet was looking at technology. I mean, if we go into the technology area, look at technology, look at the scooters. So the best performers, the ones that really escaped the selling on Friday, scooter 27, 30, 19. How about the one that got hit the hardest on Friday? Renewable energy, 97.9. So the areas that were strong would have had the most in the money calls. And so it actually behooves market makers to drive prices lower, and many times they will. So that was a big factor, I think, in the market on Friday. I know everyone looks at that and says, well, that's, it was a kind of a bad day, or maybe people think, it's just a little profit taking, whatever. I think it's a lot worse than that. I think that it comes down to max pain. It comes down to options, and it's something that we should be looking for every month, which is why, again, we have this event on the Tuesday before the third Friday of every calendar month. One other group I'll point out is financials. Now, we know the financials have been very strong, but look at the groups that did the best on Friday in the financial sector. Insurance brokers, Scooter is 5. Specialty finance, Scooter is 1.8. And then you had the property and casualty insurance, 36.4. But those are 3 relatively low Scooter scores, and they did okay. Look down here at the bottom. Banks, 91.2, the highest Scooter score among financials. It got hit the hardest by far, 3%. The manipulation in the stock market around options expiration, if you're a short-term trader, you absolutely need to be aware of this every month. If you're a long-term investor, this doesn't matter. Banks, they go down this week 3%, or Friday 3%. Next week they go up 3%. Who cares, right? But if you've got options that expire or just expired on Friday, you definitely care, because you just lost a ton of value in those options based on this pullback. So just one of those short-term inefficiencies in the market that everybody really needs to be aware of. All right, let's move on to relative strength. So I want to talk a little bit about technology first. So these are the sectors. And looking back at technology over the last few months, we've, for the most part, just kind of been going sideways here. Technology hasn't done great, but it hasn't done horribly. When you look down here on the bottom, this is the absolute chart. Technology's broken out. Technology's making new highs. So it's going higher. It's just not outperforming the S&P 500 right now. It's going sideways relative to the S&P 500. Now, as we get this PPO closer and closer to the center line, and if the relative strength line here moves down close to the 50-day moving average, that would represent the first time that we've seen that in almost 2 years. So this is kind of a big deal, and I believe it's setting up technology to do well for the next few months, maybe several months throughout the balance of 2021. But short term, we may have just a little bit of pain that we still need to get through. In consumer discretionary, we actually have quite a few stocks that are in our portfolios from this group. And, I think for good reason. This is a group that's done very well in 2020, had a little bit of a pullback September through the beginning of November, and then made another run to the upside. We can see that relative PPO is trying to turn back to the upside, but let's watch to see if we get this relative breakout on consumer discretionary stocks, because this is a really important area. And anytime you've got a group that's breaking out to a new relative high, it's a very clear sign that Wall Street is favoring that group and money is rotating there. So it's something that we absolutely want to keep a close eye on. Communication services. Now, this is the one I was talking about. Now, on an absolute basis, when we pulled back, remember the high that we had earlier was up at around that 65 level. And so this is a pullback getting close to that. But look at the relative support. Here was relative resistance in March at this 0.0173 level. We broke out, we came back down. Essentially, we tested that level. Went up again, triple top, came back down, double bottom. Looked like we were breaking out to the upside, false breakout, come back down. And now this is the area of key relative support that I'm watching. So if communication services can bounce off 65 and also start to put in a a move and an uptrend, get an uptrend started here on this relative chart, that would be pretty bullish for not only the group but also for the market in general. All right, industrials. I'll just go through the aggressive groups here. So we've got the industrials coming down. I'd like to see this be a bounce right off of this rising 20. There's your 20-day there. When we moved up above, we were still below the 50. We were still in negative territory then. But still, we did bounce off that 20, and we've been doing so now for about 6 months. So this was a good little pop. I'd like to see a breakout in the industrials above the earlier high that we saw to open the year. And if we can get that and see this relative strength start to build, that would be incredibly bullish for the market. So industrials will be a group I'll be watching very closely. Now, financials had been under pressure for a long time. 2020 was a really bad year for financials until we got the positive vaccine news. And you might say, well, what does the vaccine have to do with financials? Well, the vaccine is going to help a lot of the companies who have loans with banks. So it's not just the financials, it's really the banks that I'm keeping an eye on, because when the banks are healthy or getting healthier, that tends to be a good sign for the stock market. And that's what we've been seeing. We've been seeing money rotating, not just in the financials, but more specifically into the banks. And I'll show you that in industry group relative strength chart in just a second. But you can see this breakout now is above the high that we saw in early June. It's also approaching the high we saw in March. So this downtrend seems to be completely reversing back to the upside. Now, the good news is I think that financials will do well. Bad news is I don't know that the yields are going to continue to rise much from where they are now, at least for a period of time. And if that's the case, I suspect that we'll see financials go up. I just don't know that they'll be relative strength leaders. So I wouldn't be surprised to see more sideways action, maybe even a pullback to test that rising 20-day. Those are just a couple of things I'd look for there. But the good news is really these aggressive areas of the market are doing well, but we are seeing more rotation away from technology, away from communication services, and more of that is going into industrials and financials. And whether or not that continues, well, that's going to be one of the big questions of 2021. I think it will to some extent. I think industrials, we're going to see it turn back up there. Financials, I'm not so sure at this point how much further we'll go in terms of relative strength. All right, moving on to the industry groups. So now the industry groups, let's go through the technology really quick here. So this is computer services continually in a relative downtrend. Not really that interested there other than maybe a specific stock here or there. Semiconductors look very strong, and they just broke out again to new highs. This is one of the strongest, most consistent areas of the market. It's continued to outperform, and I really continue to think that not owning semiconductors is doing a disservice to your portfolio. All right, for the first time in quite some time, you can see software stocks have broken below their 50-day moving average. On a relative basis, software is broken below its 50. Now, if you look on an absolute basis, it's probably still above its 50, and it's continuing to move higher. And this, by the way, is what will happen to a lot of groups in the market. Absolute chart will show higher highs and higher lows, but the relative chart, that's the key. Who is leading? Which areas of the market is leading the S&P 500? That's what we want to know. You know, being part of software for the last 2 or 3 years has been awesome, but we've been cutting back. And the reason we've been cutting back is that we're just not seeing any more relative breakouts. So we'd really like to see this turn back up and eventually get up and take out that 125, 126 level. All right, electronic equipment. This remains one of the best areas in the market. Since that relative low, late August, straight up. So this is a group that I absolutely would continue to favor. Computer hardware, we're getting some consolidation. Big move up on a relative basis, setting that high in August. Since then, sideways consolidation. I think it's just a matter of time before we get the breakout, but you have to acknowledge the relative consolidation at this point. Can get a little frustrating from time to time. Electrical components and equipment index, also very, very strong, looks solid. Relative price action above that relative 20-day, which is above the relative 50. And then, of course, here you can see the breakout above a lot of sideways action. Once that happened back in October, we have been moving straight up, relative strength very strong. And then telecom equipment, not a good group. It's been improving of late. Still that PPO, relative PPO, remains below the zero line. I'd be careful as long as that remains in play. All right. Let's go through the financials in terms of the industrial groups, or excuse me, the industry groups. So let's start off with property and casualty insurance. Still below the 50, the 20s below the 50, where our weekly PPO is below the center line. I think you got to be careful here. I'm not ready to call a bottom on that just yet. Mortgage finance is improving, but I think we got to get through that June high. We're right at it right now. We're definitely looking better with the action above the 20 and the 20 crossing the 50 and just going through the center line. But I really would like to clear that June relative high, and we're not quite there yet. All right. Insurance brokers, you can just see the relative downtrend continues. Not interested. Financial administration stocks have pulled back nicely on a relative basis. You can see that on an absolute basis, this has been a very strong group. Relative basis, it was leading all the way up to the beginning of December, but it's pulled back. And normally these pullbacks represent opportunities. I believe financial administration will do well. And I do think that this pullback is creating an opportunity. Reinsurance index continues to trade down below its 50 on a relative basis. 20s below its 50, PPO's negative. Not really interested there just yet. Consumer finance hit that 50-day and look at it just turn right back over, rolling over. Now, the interesting part here is notice we broke out on an absolute basis back at the end of December when we tested that 50, but we've just simply gone back down. So we still got higher highs, higher lows. The absolute chart's fine, but it's the relative performance that we just are not ready to jump in on. I think this group still has a little bit of work to do. Investment services, now this one has broken out. And not only has it broken above its 20, which is broken above its 50, but now on a relative basis, we've taken out all these tops from 2019. So we are now up near a 2-year relative high. Investment services look strong. Full line insurance, improving. Still the 20 trying to cross above the 50. And this one, again, I think just gets back trying to get through that June relative high. We're still way off where we were a year and a half ago. So baby steps, first baby step is to get through that June relative high. All right, banks. This is the one that's completely changed. Here you can see we are challenging the April high. We did clear the June high. The 20s coming up to the 50, that PPO's gone positive. I think banks are going to do well, but I do expect that we're going to see sideways consolidation on the banks pretty soon because, again, I think that the Treasury yields probably going to moderate here. They've been on a roll to the upside, but I think maybe we see a little pullback, a little consolidation in those yields, and that will probably temper the uptrend that we've seen in the banking group. Specialty finance just continues to weaken. I mean, I'd like to make a bunch of excuses for it, but I'm not going to. Overall, we're still fine in an uptrend, but we're lower on an absolute basis than we were in July. The market's a lot higher, and as a result, you can see that July high in terms of relative strength, we've been coming straight down. So it's not that we're losing money in the group. It's just that on a relative basis, the group has been very weak. Asset managers, definitely strengthening, got some overhead relative resistance that we're going to have to deal with. But we did take out that February absolute high, and we're trending higher. I'd be careful if this were to roll over in terms of the relative strength, but otherwise in the short term, I'm still fine with the group. Life insurance, this is the last group we'll go over. Life insurance, you can see trying to make the breakout here above this double top. So far, unable. All right, earnings spotlight. I just wanted to talk about a couple of companies here that I think have really performed well. They reported in January, and I think they've gotten some pretty good reaction. And these are stocks you might want to consider as we move forward. Micron Technology, easy beat, top and bottom line, gapped up with earnings, pulled back, but still in an uptrend. Watch that rising 20-day moving average. Schnitzer Steel, SCHN, huge move up. That's when earnings came out. Buy on rumor, sell on news. It's been down for about 6 or 7 straight days. $10 off of the high. I think it's getting to a point where probably somewhere in the upper 20s, low 30s. Maybe we're already there, but I would suspect we're going to see a turnaround here fairly soon. Constellation Brands, there's your earnings, gap up, shooting star, reversal. This is another one, I think, somewhere right around this current level near the 20-day. I expect we're going to see some buying resume. Let me take a look. Last two here. I'm going to do JP Morgan and PNC Bank. So JP Morgan moving up, starting to see that AD line creeping higher. Relative strength has been pretty good here. We've pulled back last couple months, but overall we've been trending higher. But I like PNC better, and I like PNC better because the great AD line, much better than JP Morgan's. Price action looks good. And the relative strength, just a few weeks ago, we were at a 52-week relative high. So I think this one's looking pretty good. All right, last thing, 3 you must see. Let's go through these pretty quick. 3 software stocks that I think look very interesting, even though software hasn't been great. Beautiful move up. I don't know. This looks like maybe a cup, maybe the right side of the cup forming here. Certainly something to keep an eye on with APPN, which is Appian. Next up is MGNI, which is Magnite. But again, up, sideways consolidation, up, pulling back, testing key breakout area, and now turning up again. I think this one looks really strong. AD line's very strong, relative strength super. This is one to keep an eye on. And the last one, I really like. I think this is a stock that looks to me like it just wants to go higher. A lot of sideways consolidation, starting to move in December with heavy volume. AD line near a high. Look at this high back in February, just above 9. The high in December, just above 9. We get through 950, this one could run. All right, that's it for me today. Everybody have a great day on Tuesday. Good luck in your trading. And I'll be back on Wednesday over at Earnings Beats. Happy trading, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.